Hi everybody, this is Gary doing Sentiment Timing, and this is our technical video report for Thursday, July 5th, 2018. So we saw the bulls actually show some follow through today, and this pattern that I've been showing still in play. Has a little bit of a strange right shoulder, but really what the bulls have to do is get it above the bull bear line, which is a 27.44. If they do that, this pattern is looking for a move to come back up and test these highs at the 27.91, and being we got long from the 27.12, if it gets up there, we already took some small profits when we were up here, and if they get up to the 27.90 from 27.12, it's another very successful trade. And the one thing I continue to say is that you just can't marry a direction in this market. If you're ultra bullish or you're ultra bearish, most likely you're getting your clocks cleaned. But when you see everybody getting bearish and we're heading into a turn date on the downside, simply wait for your sell trigger and only look to short rallies. When we get down to the when everybody's bearish on the market, like what he was showing, where we had the 1 and 3% bearish bullish reading, you're only looking to buy dips, and you have a bias to the upside. And this is it's a cycle that has just been consistently going throughout 2018, and there's been some great profits that have been made, and with very little stress, honestly. As long as you have your stops in place and understand that you're going to get stopped out here and there with very minimal losses, and then you can make up for those little minor losses in big ways, especially if things start to play out the way we're anticipating them. And they still have plenty of gas in the tank on the as far as momentum. We know that I believe there's a lot of bears that got trapped on these last two moves, and right now it's it's going to be one of those things that once they break through this bull bear line, I have a feeling that we could be trading up at this 27.91 in a very fast manner, and from there we'll probably start seeing some really high sentiment numbers. And as we head into the next top date, and from there we just wait to rinse and repeat and go on the short side. And that's there's so many points to be made, both up and down, as long as you don't marry a side and say I have to be bearish on every move, or I have to be bullish on every move. You can get in and out, and this isn't day trading stuff. This is these are swing trades. They last a couple weeks. You take some profits off when you have them. They either look to reload or just run with what you have. But for the most part, it's a pretty stress-free trading environment if you're following these rules, where you look for time, which is when Woody tells us to anticipate either a low or a high. You look for sentiment to start matching up with that position, and then you just let price determine where you're going to get in and where you're going to get out, and that's it. And you just rinse and repeat this over and over, and let everybody else stress out about what's going on. It's to me, it's a fantastic. I've never been more relaxed in a trading environment than I've been in 2018. It's been very simple. Being able to chart what's going on based off of what Woody is saying has all worked out pretty good. We've had a couple little head fakes here and there, but that's going to happen. Like I said, we're going to get stopped out of some positions. We're not going to say that this is 100% foolproof, but those positions that you get stopped out of are going to be minor losses. And we're long from the 27.12. If it makes it up and tests the 2800 level, that's another fantastic trade. And that was the coming off of from the one from here. So it's I'll take these 100-point moves month in and month out, and even if I get 70% of that move, that's fine with me. I don't know too many other people that are making 70 points a month off of the S&P. So again, we're right here. We have the bullish divergences. We know sentiment's been low. We still have some time on the side with the bulls. They just need to get it through this bull bear line. If they do that, then I expect to see a bare minimum close the gap at 27.53, but I think they're up at 27.64, and then testing the 27.73 in a fast manner. They on the the bulls need to really defend. Our first line of support 27.30, not too far above that, but more importantly is right here, right in this 27.23. You can see that's where this head fake down came, and then they shot back up. So you know that we now have the majority that are starting to buy the moving averages that just cross, because that's how they do things. They follow the simple man's trading system. When the 50-day is above the 200, they only buy. So they miss a big part of the move by the time that happens, but it's good for us because we're getting in before all of it happens, and let them move the market higher when we're already in place. So support levels, this is the important one. More important, the 27.15 and this 27.11 area. If they break that, then guess what? Then the market, it's the pattern that I've showed of the inverted head and shoulders isn't going to work out, and I would probably just wait for the next turn date to the that's going to be to the downside. But I think this one's going to work. Everything is in place. We just need to see the bulls push it through this level, and if they pull back, see one of these support levels hold, whether it be the 27.30 or the 27.22. If they hold, then again, I believe that we head back up, and we're probably going to see the 2800 in a pretty fast manner. So pretty overbought on the 15-minute chart. So maybe we do get some backing and filling in the morning. What I've noticed, or if history is our past, is that when the bulls have the momentum going, being overbought or oversold and bearish divergences really don't matter. They just continue higher, and that's kind of what I'm hoping plays out, and we get back up to the to that 2800 level, because it would be, like I said, another just fantastic trade with very, very little stress involved, and it's just rinse and repeat. That's probably the best way to put this. So to sum it up real quick, 27.44, we should be heading somewhere up into the 27.75, 27.65. Those would be the next two target zones. Downside, we want to watch the 27.23. That, I think that has to hold, and more importantly would be the 27.16. So everything is in place. Let's see what plays out tomorrow. Enjoy the rest of your night, and I'll talk to you guys in the morning.